The third activity, as described under Accounting Standard 3, is the financing activity. Now students, as we had done earlier, this is an activity which actually represents any change in the size or composition of the money contributed by the owners or the capital employed in the business on account of long-term loans. That means financing activity includes those activities which are a part of capital employed, that is the shareholders funds as well as long-term loans. So any change in shareholding pattern or shareholders funds would be reflected in financing activity, as well as any change in long-term loans or liabilities would also be reflected in financing activity. Along with this, shareholders funds involve dividend payout. So dividends paid on shares by a particular company is also part of financing activity, and any sort of interest paid on account of long-term loans is also a part of financing activity. Now students, the only thing to remember here is that just like all other activities, financing activities can also result in inflow or outflow of cash. In case shares are issued, when we issue shares, we collect cash. So it is an inflow. Whereas when preference shares are redeemed means you are paying them back, or debentures are redeemed. So in that case, it is an outflow of cash. So you have to keep in mind the flow of cash while calculating financing activities or cash generated from financing activities.